The math is very clear. If you invested $10,000 on each ETF, total of $20,000, we have 51.72 divided by 12 times 10,000. That's going to give you 430.96 US dollar per month. And the other ETF is going to give you 11.01 divided by 12 times 10,000 is going to give you only 91.75 cents US dollar per month. So you can clearly see there's a huge difference between the two ETFs. One has advantage in terms of income. This is not the whole picture. In this video, I'm going to compare between these two ETFs and show you which ETF is better for you to invest your money. Recently, YieldMax has just announced brand new ETF, which is BIGY, YieldMax Target 12 Big 50 Option Income ETF. BIGY has a lot of comparison with YMAX, so I thought about we make this video comparing these two ETFs and you see which ETF is going to be best for you to invest your money, because you have to know this in order for you to not make a mistake that a lot of people have made in the past. And that mistake is just by looking at the yield and by looking at what ETF is cheaper. That's not the whole picture, guys. In this video, I'm going to compare these two ETFs, and then it's going to make life very easy for you as a passive income investor or as a growth investor. First, we look at the YieldMax Universe Fund of Option Income ETF. YMAX, the price of today is $18.24. 52-week range is between $15.69. So at one point, it went all the way to 15. Then it climbed back again to where it is right now at 18. The highest has gone within 52-week range, which is about a year, has gone all the way to $21.94. Again, that's just a price range, has nothing to do with the yield that they've paid. Average volume is almost 1 million share traded on a daily basis. Expense ratio is 1.28. The other ETF is YieldMax Target 12 Big 50 Option Income ETF, which is BIGY. The price is $50.30. So this is one of those three YieldMax ETF that came up with a higher price. So they start about $50. The price range of this ETF within a week has ranged between $49.45 to $50.74. Volume is only 16,000 share traded a day. That's not much. Expense ratio is 0.99. As for yield, it's only target about 12%. But again, they might pay a little bit more. But I'm going to show you in my comparison below. This is comparison table that I have right now. This is metric price per share. We have annual yield. We have management expense ratio, monthly income per 10,000. Performance, diversification, risk. Share price right now is $18.24 for YMAX and BIG is $50.30. Annual yield is 53. Gross is 51.72. This meaning it has taken out the MER that you're paying, because a lot of people don't take this out. But you have to remember, when you invest in these ETFs, of course, your MER has been calculated and it's been taken out from that yield. So we get a 51.72, still very, very high. And for BIGY, the yield is 12. After you pay MER, you end up with 11.01. Monthly income for $10,000 with YMAX, you're going to get $430, and with BIG you're only going to get about $92. Performance with YMAX, you get higher growth potential. 15-year compounding creates exponential results because of that yield. Remember, you get a 53%. If you take that amount of money that you receive and you reinvest, you're going to get a higher growth, even though the ETF itself doesn't grow as much. When it comes to BIGY though, the performance of this is a sturdy, consistent growth suitable for conservative portfolios. So if you want to have a very conservative portfolio, or for people who have a bigger portfolio, for example, if you have $1 million, is very, very, very good for this ETF, because you get 12%, $1 million, that's about $120 per year. That's a lot of money. Diversification, YieldMax is focused more on income-oriented investors because it uses cover call to generate that income. BIGY is a balance or income oriented. So you're a person who's looking for a balanced portfolio with some sort of little income. This is fun for you. When it comes to risk, YMAX of course has a higher risk due to reliance on cover call premiums and market volatility. When it comes to BIGY, it has low to moderate, stable with low market sensitivity. Here is a detailed breakdown of the table that we've seen above. YMAX price right now is at $18.24, allowing for more frequent share accumulation during the investment. BIGY higher price of $50.30 means the fewer shares are purchased, slightly slowing compounding, because one, or you get a higher share. So for people with a low amount of money, YMAX is very good because it's only $18. You can get, if you have $20, you're going to get one share. With BIGY, you can get any share with your $20. Your annual yield, YMAX is 53, reduces to 51 after 1.28 MER. BIGY gross yield is 12. After you pay the MER, is going to be 11.1. Monthly income for every $10,000 you invested. With YMAX, you're going to get $130.96 per month. With BIGY, you're only going to get about 91.75 per month, so it's very low. When it comes to performance, YMAX is ideal for aggressive investors seeking exponential growth via compounding, it compounds because remember your yield is almost 52%. So if you invest some money, you're going to get that compounding interest. It's going to accelerate your portfolio to be bigger. With BIGY, provide a stable, predictable return suitable for conservative portfolios. And again, I've said for people with a bigger portfolio, it's very, very good because if you have like a $1 million, $2 million with BIGY, is going to give you 12%. So imagine $1 million at 12%, that's $120,000. So that's a lot of money. This is a big income you can have. Diversification. YMAX, income focused with a strategy based on cover call options, making it more volatile. BIGY likely offers more diversified approach, reducing exposure to single sector risk. Remember, BIGY invests in 50 stocks, and not only invest in 50 stocks, but these stocks are diversified across sectors. When it comes to risk, these two ETFs have different approach. One is higher risk due to its reliance on market volatility for cover call premiums. BIGY is a little bit different. It doesn't rely too much on volatility as YMAX, and therefore is lower risk, suitable for long-term stability with reduced market sensitivity. You can actually see on the chart here, the volatility is very low. You can see all the prices, guys. Like, you know, it just went from 50, 51, 50, 51, 58, 28. There's no big move as we've seen on YMAX. Final observation of these two ETF, YMAX dominate in a growth potential and income generation, but comes with higher risk and volatility. BIGY is a safer choice, offering sturdy income at lower yield and risk. So conclusion, guys, if you are an income investor or you want a lot of money right now, YMAX will give you that income. Also, if you want to invest your money, YMAX is going to give you that and has lower stock price. In my opinion, BIGY is for people with a lot of money. If you have like a 1 million plus, it's a really good investment to buy because you can buy this and you can generate that 12%. Or for people who have bigger portfolio and they want to reduce volatility. So for example, you can mix a YMAX and BIGY. But mixing these two is going to be a topic for another day. I can make that video. If you want me to make that video, as always, please do me a favor. If you like this content, you find it has value, just make sure you smash that like button. And if you know this video is going to help someone else, make sure you share with that person. And if you don't want to miss any of this video on income investing and also growth investing, please consider subscribing to this channel. Thank you very much for watching. Till we meet in the next video. Bye bye.